What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online. As usual, tonight I'm just going to go over. Today was the dividend day or the rent payment day for all of the Mogul properties. So if if you're on Mogul Club, you should have received dividends for any of them, any of the properties that you own that are operating so far. I'm just going to go over what I've made so far in that portfolio. I've only been investing on this one for a short time so far. I've really only invested 85.50, but with what's been paid in rents and some of their bonuses, um, I've got a little more than that at the moment. We've got 7 properties invested. Oh, but before I forget, I want to mention something about Lofty and their taxes, because I know a lot of people are probably getting close to filing their tax forms. One thing that I noticed on my forms, and I have confirmed with Jerry, the founder of Lofty, uh, that when they're reporting your basis on those tax forms, let's say I was buying this property today, they're only reporting this number as your basis, even though when you're purchasing it, these fees are also included in your total cost, right? So I'm paying 26.21 for this token, but they're recording your basis at 23.34. So if you've had a purchase and a sale of any tokens last year, you want to check with your basis. And I would, if what I'm doing is I'm just going to provide this additional information to my accountant and say, yes, they're showing my basis as the token price, but I also spent, almost $3 in fees. And I'm going to have, so for right now, it seems like we're going to have to provide that to our accountants on our own. Obviously, I'm not giving you tax advice. You want to talk to your accountant about that. But when I noticed that those fees weren't in there, I can't fathom that not being part of my basis or as an expense that I can write off or in some way account for it, right? Because otherwise, there's $3 on each transaction here that I would be, if I purchased it and sold it, whatever my profit was, they'd show an additional $3 more than what I actually made. So you want to look at those forms. If you notice that. If you've already talked to a tax person and you have a different thought about that, definitely share that with me. But that worried me. All of this fractional real estate investing that I've been doing since last year definitely has complicated my taxes a bit. They already were very complex because of just the properties I own in real life. But I wanted to mention that I'm going to do a little bit longer of a video on it. In the next couple of days, but I wanted to mention it just because we are getting close, and I did just get confirmation from Jerry that that's accurate, that they're not reporting those fees as part of our basis. He did mention he's going to check with their CPA and see, if what I was telling him about this is accurate. But he said even if it is, he thinks that they've only corrected going forward. Um, which is problematic if all of our basis is recorded improperly on everything that we currently own. Because when we go to sell it, you're going to have to track any of your past purchases, any of the basis on those on your own. So that was not great news about that platform today. As a reminder, this all of this is the Wild West right now, right? Like the reason we're able to get really good returns on a lot of these platforms is because it's inefficient. There's problems. We're taking a risk a lot of other people maybe wouldn't take. Before I forget, please like and subscribe. And in the description to this video, there are links to all the sites I'm currently investing in fractional real estate on. Some of them will give you free money. Do your own due diligence on their offers and on the sites and on any properties. Don't buy into them just because I have. And the last thing, there's a link to a Discord channel where a number of us investors get together and talk about many of these sites on a regular basis. All right, that is it. Let's jump into the returns for March. In this portfolio, I don't have a ton of money in it yet. Only 86.99, and 140 of that is just actual cash and credits that I'm going to buy additional shares with. But so this month I got $41 in rent payments from that. If you look, this seems like a really poor return, right? And I'm going to show you what's going on in a minute. But $41 times 12 divided by 8,600. Well, that's only 5.7% cash on cash return. What's going on? I've been doing much better than that. Well, one, it's a little bit of a down month, so I want to look at, what's our quarter to date, what's our total. So, just adding up all the months from the quarter, multiplying it by 4, dividing that by the 8,600. And okay, I'm at 6.4% cash on cash return. And again, this isn't taking into account appreciation, tax benefits, anything like that. But I want to show you, it's actually, I think, much better than that when we really dig into this. So I'm going to go property by property. This is the one that I've owned the longest. It's the Axelrod, which is the duplex that's operating as a short-term rental in Houston. It is the one that I bought the biggest piece of so far before I realized that I'm probably going to be buying pieces of these, every week or every couple of weeks. And you can see, the dividends I've received from this one, they've actually consistently gone down. I expect it to be cyclical. I don't know why March was so bad. But so this one, the return is going down. But let's see. Let's look at, let's see, $27 times 12. Divided by 5. And so, yes, the cash on cash this month, even though this is the worst month, 6.4%. One of the things to keep in mind is I actually got, and on a lot of these, I've been getting some incentives to buy them. So even though it says I own $5,050 worth of shares, I really didn't spend that much on these. Some of them I've got up to a 10% discount on, which makes the return a little bit better. But the other thing too is, like, let's look at this quarterly. This is a short-term rental. So I expect every month to be different. Hopefully we don't see many more of these $27 months, but so let's do quarterly. Okay, 460. If we do that, divided by the 5,050. Okay, now we're getting a 9.1% cash on cash return. And again, that's before we get any appreciation. That's before we get any income growth. So I'm actually really happy with this one. High single digit cash on cash return. And I know these are not our big months, right? I think that the summer months are probably going to be bigger. I know here in San Antonio, our short-term rentals, we actually have a good summer, and then we usually do pretty good around Thanksgiving and all the holidays at the end of the year, Christmas. Those. So November, December tend to be fairly good as well, and that looks like that was the case here. I don't really understand why they have that big pop in January. Maybe there's some event that is going on there. I'm not sure, but it looked good there. So that's the Axelrod. The Rhodes, this is the 10-bedroom rent by the room property. It's a pad split style property in Mesa, Arizona. I own much less of this one. This is weird, the 509.33. What they've basically done is said it's appreciated $9. Really, I spent $5 or $500 on this, and so I'm going to do the math on that. And I don't even really have to do math because it's $5 and 500. So what is that? No, I do have to because it's times 60, so it's like a 12% return. But let's do the math. So 5 times 12, 60 divided by 500. Yeah, 12% cash on cash return so far. We've had a 5, a 4, and a 6, and so that average is also going to be the same, right? That's 15 divided by 3 is 5. So 12% cash on cash return on this one. This is actually fantastic. I mean, I think that, sure, it's going to move, but that's a really good cash on cash. And again, I'm ignoring the fact that they also say it appreciated $9, but that's helpful as well. We won't see that until we actually sell it. And so this is one thing I wanted to point out that I wasn't completely getting. The dark green line is the amount of our investment, right? So I made this investment in December, and it's just stayed the same, or the value of it. I guess it actually has moved up a tiny bit because they're including the appreciation. And then these little, like, light green or pastel green or whatever this is, lumps are the amount of dividends that we receive. And so the WAGs, this is another short-term rental in Houston. I actually bought it in February, so that's showing, that's why my investment started in February. It hasn't had a full month of operations yet, so I don't have any income from that. And that's what I was saying, like, I actually think my overall returns are going to be better because this is showing the full investment. But I have several properties that haven't even started operating yet. So the WAGs, no money there yet. The Mafee is right. This is one. It's in Decatur, Georgia. It's another rent by the room property. It started off really strong, right? $8 times 12 divided by the $500 investment, 19% cash on cash return. I mean, that's absurd. I don't expect it to stay that high, but that's one I'm really happy about. And it looked like up front it was going to really be a cash cow, but again, I don't think it's going to stay that high. I mean, that looks really good. Let's look at the Johnson. This is the, and I bought a little bit more of this one, but this is the Boston property, the first one that they put up that is a short-term rental. You can see, okay, I bought a little bit of it, and then the next month I bought a little bit more. It's not operating yet, so no income from that. The Celeste, again, just bought into it in March, no income yet. And the Victor, no income yet. So when I'm showing, when I calculated that 6% quarterly return or the 5.5 or whatever it is, cash on cash return overall, that's with only about, that's without all of the properties, showing some income. Now, obviously the Axelrod makes up more than half of my portfolio right now. But I think I don't expect it to continue to have down months, but we'll see, right? That's why I'm doing this as an experiment. I'm not throwing a ton of money on here until, it'll probably be a year or two from now before I get very serious about investing on this platform. Because I wanna make sure that I'm comfortable understanding, how much I can trust their underwriting, how much they're able to keep to their numbers and whatnot. But overall, so far, I've been very impressed. Like I said, I mean, I expect short-term rentals to be all over the place, and so until you have a full year of operations from this one, who really knows how it's going to do? These rent by the room ones, they're going to be a little bit more stable, but there are still, you do still have a lot of turnover. This one has 10 bedrooms, so you'd think it would be kind of smooth. That you're going to have people coming and going all the time. But you never know. I mean, you could have a month where you have a couple of vacancies. Uh, and then, of course, like the ones that we just bought, they're not up and running yet. So there's no income, right? And so, but the ones that are, the ones that if I only looked at the ones that are already operating, I mean, I'm really happy with it with what they've done so far. Obviously, like I said, I mean, just because I'm buying these doesn't mean that you should. I have done a video on all the ones that they currently have available. Like these are all sold out, but there's still a little bit, or there's still quite a bit of the Johnson left. I wonder how much of the Celeste is left. This is I bought the Celeste and the Johnson. Again, just because I bought it doesn't mean you should. I do have a video of all three that you could check out. They're in the Mogul playlist. This video is part of that playlist, but you can find it on my channel. I think that's everything for tonight. I did ask you to like and subscribe. I mentioned I have videos about all these, and that I have one coming about the taxes. But yeah, if you have already done your taxes for Lofty and you were already, you already noticed the discrepancy in the if you just took their word for it, I think one, you might want to go back and look and see, like, is it a big enough deal? What I think it would probably mean is you might pay more than you should have. I think it's possible. So I think, you want to look at what your basis is and talk to your accountant and see, like, hey, if I actually pay these other fees, can I deduct them somewhere? Because, in my experience, I'm never spending money on an investment that I can't either include in my basis or as a deduction somewhere or something. If they've somehow created fees that can't be deducted anywhere, uh, I think it's going to make that platform like uninvestable for me, to be honest. It's going to make it really tough um, to overcome the fees, and because you'll be taxed. It'll always overstate my profit if I can't actually deduct those. So I don't know. I'm super curious if anybody else has already looked at this, if they've talked about it with a CPA. If you have and you want to share, what you've heard so far. Again, I mean, I'm not here to give you tax advice whatsoever. I just want to point out that it is clear that the fees that you're paying in this purchase do not get included in the tax forms that were provided. That, like I said, I did confirm that with Jerry at Lofty. It appears that way when I look at back at all my old transactions. It might actually show up right on purchases with the credit card. That's one that I'm not 100% sure on, but it looks like they are recording them better when that's the case. Um, but overall, I was mind blown by that. So yeah, if you have any insight on this, I would love to hear it. Otherwise, that's everything I've got for today. Like I said, I mean, Mogul. I've mentioned it several times so far. Mogul is it's providing the experience that seems the most like investing in real estate in real life. Like I'm getting a levered return. I'm getting my cash paid monthly. It seems like they're picking good properties. So far, in my mind, they're really the winner as far as like just a real um, passive experience where I have to do the due diligence up front, figure out is this a property I want to buy. But once I do it, it's pretty hands off. That's been my experience so far. But I still just keep going back to Lofty. I actually have more money on Lofty, quite a bit more, because it is, even though in a lot of ways it feels broken, I think within that brokenness, I just see so many opportunities, and that's why I've been getting really good returns. Now, if it turns out that I'm going to get taxed significantly more than I expected to on those really good returns. I mean, I already think that it's going to be, short-term capital gains on some of my deals, and it's going to, it's not going to be the same sort of, these aren't, it's not the same sorts of deals. But if it turns out that I can't actually include their fees in their basis or my expenses everywhere, um, I think it's going to be really hard for me to stay on that platform. So anyway, and like I said, I'll do a longer video about that, really, giving some examples and really explaining what I think it means for us. But again, you want to talk to your tax advisor about it if you think that issue is affecting you. Um, yeah, it was pretty devastating to realize today. You can tell, like, I want to really say more about it, but I think I'm going to save that for another one. Today, I really just want to give you an update on my Mogul portfolio. Um, if you got dividends from Mogul today, feel free to share in the comments or in the Discord. Like, let us know what property you own, how they're doing, if you have ones. I would sometimes they send out an email that shows the dividends for all the properties. I didn't see one of those today. Maybe it'll come out in the next couple of days, but I do like to keep track of how everything they're doing, everything they have is doing. Like, I'm super curious how the print did. I didn't buy any of that. Um, let's see, which other ones? I didn't buy any of this one. I think that's been there for a while though. But big part of why I'm doing this is just to share information with other investors. And so if you have some of that info to share with us, please do jump in and talk about it, because I'm missing I don't have any of the Krakow either. So I'm missing, the ones that I didn't buy. I'm curious how they're doing as well. In any case, that's it for me for today. Until next time, I'm just going to keep making mistakes so that you don't have to.